Today's video is going to be a combination live trade and web lesson. The main purpose of the video is to help traders who are struggling with a challenging ticker or market environment. Many of the things I talk about in this video apply to all stocks, ETFs, futures, whatever you trade. It also applies to all time frames, whether you're a growth trader or a value trader, whether you're a day trader, swing trader, or long-term position trader. I think that you can find some of the information in this video helpful. It also explores different techniques and tools to use when you're dealing with a difficult ticker, volatile or whipsaw price action. There is commentary that addresses not only the live trade, but what one's trading focus should be, discipline, context, and critical performance priorities. The ticker traded for today's example is the NASDAQ Mini Futures. Before I cut to the live trade, I want to point out what my normal chart looks like. It usually has a 5 EMA, a MACD 24, 20, 14, the open, which is this dashed yellow line, a prior close, which is a dashed blue line, not shown in this example. I'll draw trend lines, I'll draw range lines for not only intraday price action, but price action on monthly, weekly, daily charts, as well as overnight ranges and pre-market ranges and opening ranges. Now here's a chart for struggling performance or challenging conditions. It's got some additional tools on the chart that can be helpful. I have all the stuff that I previously mentioned. Then I have 3 additional tools. I have a regression channel 60 period for standard deviation. It's the gray channel, and this is a NinjaTrader 8. The regression channel is self-adjusting. And then I have a static trend channel, which is a drawing tool, and that is the red and the green. And what I'm interested in is the value areas and the point of control. The value areas are in blue with a little price level right next to it. There's one and there's one, so you have an upper and lower value area. And then the point of control, which is this small golden dashed line, again with the price next to it. The duration of this trade ended up being very long, so I only show a portion of the trade live. And then at the very end of the video, I'll show you how the trade turned out and what the final exit was. Today is July 15th, 2020. It's Wednesday. The market's just opened a few minutes ago. The first thing that I do when I sit down at the trading desk is I look over the action of recent days. You can see we had a strong down day on the 13th, and then yesterday it went sideways for most of the day, and then it had a shakeout to the downside and managed to come back. It's really important to consider what catalysts, if there's any new news catalysts for the stock or the market, and there is. Today there's reports of positive trials for the COVID-19 vaccination, even though it would still take probably years to produce enough vaccine for everyone in the world. The market's pretty happy about it today. The 20 EMA on the NASDAQ has been the boss moving average. See, it tested it 1, 2, 3, and yesterday 4 times. So it'll be interesting to see if that manages to hold and we have a rally. I should point out that the prior day was a very ugly day. It was a new high negative reversal, and it was also an engulfing candle or bar to the downside, which in many ways is a change in character for this run, showing that if you're struggling, especially with the NASDAQ, which has a lot of noise, you can use a regression channel. In NinjaTrader 8, it's self-adjusting, Then you can overlap a trend channel on top of it, which is static. So you have a dynamic, which is the regression channel, and a static, which is the trend channel. This is 4 standard deviations, 60 period regression channel, and it can often show a safer place to enter. I've also thrown up the volume profile levels. I'm not really so much interested in all this as I am just the point of control and the other levels that it produces here and here. You can see that this morning the regression channel started out by contracting, and since then it's begun expanding. So the volume profile levels, the regression channel levels, as well as easily identifiable support and resistance areas on higher time frames, such as the daily, 20, 50, 200 moving average, can offer low risk or small risk places to attempt an entry. There's a few things I look at when I'm trying to make a precise entry. I want to do it at the right time. Certain times of the day favor certain things. For example, usually around 8 a.m. Pacific time, there'll be a pullback if there's been a strong run up. Not always. And sometimes if you don't have a pullback around 8 o'clock, you might see one around 8:30. Usually when the market first opens, it's pretty volatile and chaotic. Sometimes it struggles to find a direction until about 50 minutes to an hour after the market opens. Be aware of what price usually does at different times. Quite often from 9 a.m. to 11 a.m. Pacific time, price will form a range and pretty much go nowhere, and often isn't even worth trading. So be observant and apply your observations. Make them an edge. The second thing I look at is I want to have a good small risk entry. I call it the right time and the right entry. You can use your levels and your tools to help you find that, especially if you've been struggling. Sometimes volume profile levels, you'll see resistance or support. At the regression channel, unless you have a really strong move, you might see support or resistance. It's not uncommon at either volume profile or the regression channel to see overshoot. You can see there's some overshoot right here. It's even better, in my opinion, when you have several of these things converging together. If you have the upper regression channel line, and closer to it would be a volume profile level, and then also perhaps a prior consolidation or support and resistance level on a higher time frame, or a moving average from a daily. It won't work every time, just like nothing in trading works every time, but you can use it as a tool to help you quantify your risk and reduce your risk. I expect that this stop will probably be knocked out, but that's okay. Also, I want to have the right MACD. I use the 10-minute MACD a lot to give me a bigger perspective. And you notice I don't necessarily have the same things on every chart. Certain charts are better for certain things, and you also don't want to clutter up your chart with unnecessary stuff. I feel like this chart is already on the verge of having too much, but I'm just trying to share some tools if you're struggling or working with a ticker that has a lot of volatility. The NASDAQ tends to be kind of wavy in its motion, upward or downward. But back to the MACD, I want the MACD slopes to be going in the right direction. And it's not uncommon for me to check all the time frames. The 1 minute I think of as an early warning or a scout. I can see that it's starting to decline, but it's still got a lot of negative space between the two slopes, which might suggest it's not quite ready or it's going to consolidate. This is clearly in the up direction. And then this is sloping down, but looks like it might be changing. That big move since the open gave it a little nudge. So basically, I've got some conflicting signals here so far. I've got the 60-minute chart with RSI 5 overbought or oversold, and it's not quite there yet. And it's not quite at the upper Bollinger Band. A lot of times if I see price at and oversold and at or beyond the lower Bollinger Band, or overbought and at the upper Bollinger Band, I'll know that that can act as a headwind for further movement up or down. Yesterday's a great example. The prior day we had a big down day. It looked like we were going to have some serious follow through to the downside, but we had reached oversold on the 60-minute RSI, and we had gone outside the lower Bollinger Band. It doesn't guarantee that it's not going to work. It just acts as a headwind. I also like to mark the overnight range, and usually, if I'm not too busy or I don't forget, I like to mark the opening range. I just pay attention to price action for the first 50 to 60 minutes. Put a little line up there. No big deal. I think you'll find that as you start to mark levels, like the monthly range levels, the weekly range levels, daily range levels, you're going to have a lot of lines on your chart. So it's important to try to minimize that impact. At first you'll want to use large lines because you're not going to be as familiar with it or see it as easily. But as time progresses, you'll probably want to make those lines smaller or use more subdued colors. So they're there, but they blend in. So on the regression channel line, pay attention to whether it's expanding or contracting, and it's expanding right now. Price action is a constant cycle of expansion and contraction, expansion and contraction. At some point, when it's expanding, that expansion will stop, it will consolidate, begin to contract, and when it contracts, at some point, it begins to break out. But I also pay attention to the slopes of these two channels. The dynamic, self-adjusting regression channel line versus the static, manual adjusting trend channel line. A lot of times, if I have too much conflicting information, I will not trade. It's important to know when a good time to trade is and when a bad time to trade is. When will you stay out is just as important as when you'll get in. So although I didn't necessarily have the right MACD on the 1 minute or the 3 minute, there was an overall downslope on the 10 minute, and the 10 minute I give a lot of weight to. I realize it's going to be lagging, so I put that in context. If there's been a long, strong run down, I know that the MACD 10 isn't going to show a change of trend as quickly as the 1 minute or the 3 minute. So I factor that in. But at the beginning of the day, if I can get a good entry and I have the MACD 10 in my favor, then I'm going to give it a try, more than likely. And that's the case this morning. Of course, I'm only going to give it a try if I can have a small risk entry at a place that I can put a logical and highly falsifiable stop, meaning I'll clearly know where I'm wrong. And I'd rather know where I'm wrong sooner rather than later. So we've got the right time, the right small risk entry, the right MACD. I also want to pay attention to where is it in the overnight range. This is a common trap. You'll have an overnight range. Price will overshoot it, trapping in long traders, bullish traders who think the trend's going to continue, and then it'll reverse. It's a shakeout or a morning reversal, and then price immediately starts to fall back into that range. If price were to continue to close and move beyond this pre-market range, or maybe go up and then check back and stop outside of it, I might be more interested in getting long. But I'm used to seeing this trap, and this is one of my setups, so I felt comfortable going in. It may still bounce back out. The opening price action, as I look at it, you see how even and orderly and steady this is. And then how price action starts to get wide and sloppy and loose. We've got back and forth, back and forth. Got a lot of shadows and upper and lower shadows. I call them horns and tails to make it easier. You've got a lot of struggle going on here. No one's clearly in control. It's very back and forth right now. Prices making some wild swings, and that's common during the open. And then I want right stops, and I've kind of alluded to that earlier. I was able to have the right entry and make the right stop. I don't want a stop that's going to be 40, 50 points away. I prefer 20 or less. And to get that, it's really hard. You have to be patient and wait for your setup. You have to be very strategic in your entry. So, right time, right entry, meaning a small risk entry at a logical place of support and resistance, or a place of extreme. Regression channel with 4 standard deviations is pretty extreme. I want to have the right momentum and direction for the day, which is the MACD 10. And the pre-market range is very important to me. You know, if price stays inside of it, I know that it's going to be a low return environment. It could be a range all day. Now, if that range is wide, you can make money and trade the range, but I prefer price action that's going to trend, that's going to go somewhere, that's going to go beyond the pre-market range, higher or lower. What I do like is that the other MACDs are starting to move in the right direction for the trade I just put on. There's the 1 minute, our early warning, the 3 minute, and then the 10 minute. But price action still is inside that pre-market range, and right now, just a little after 7 Pacific time, and usually for the next 15 or 20, maybe even 30 minutes, price will often form another range or consolidate or fight back and forth. So I'm expecting it, and I'm going to watch closely and see what it's doing during this time. Does it seem orderly? Who's in control? That's what I'm basically trying to deduct, is who's in control. A few questions that I ask when I'm getting my game plan together. First, let me go ahead and split my stop, which those of you who've watched a few of my videos or who are in my chat room know is something I really like to do. I usually have one stop that I handle a little more aggressively than the other. I like to scale out. I like to lock in profits as it moves in my direction. I like to take profits on strength. I really hate making defensive exits, but it's something I force myself to practice so that if I find myself in that situation unexpectedly, I won't be frozen. I won't be uncomfortable with it. I'll be able to execute. But here are a few critical questions around context that I ask myself. Has the news or this new potential catalyst or recent sentiment, negative or positive, already been priced in? Does this new information sharply up or kind of downgrade the recent 3 to 5 month or several days, depending on what time frame I'm looking at, sentiment? Or is it only going to have a temporary impact? Would the market environment be changing even without it? What might the market environment today or down the road look like after this comes to pass? Things like tariffs against China, a cure for COVID-19, things like that. What does that kind of impact now and longer term and medium term might that have? Elections are another example. Second question I ask is what hope or worry, which is basically greed and fear, is around the next corner after this? For example, the hope is that right now is that COVID-19 there'll be a vaccine, there'll be a cure. The worry is that there won't be, and the worry is that even if there is, there's going to be long-term economic damage. So that information helps paint a balanced picture when you consider it from that perspective. The third question I ask is, how would a big player hedge for this? If you're the manager of a portfolio of $1 billion and you've been long the whole ride up, maybe you're thinking it's getting a little long in the tooth, or maybe this day you think that's troubling, or maybe you are still going to be long, you're very bullish, but you can't just have a huge position unprotected. You're going to hedge somehow. What might that look like? The fourth question I ask is, how might the algos react to this new catalyst or news? Yesterday, the algos decided it was buy on the dip. Number 5, where's the trade? Who will benefit or suffer from this new catalyst, this new event, this new information? And that can be for individual stocks, it can be for the market as a whole. By the way, the blue lines are considered value areas, and the kind of gold line is considered the point of control. I'm not a huge volume profile person. I just like the levels from time to time. If I'm trading a difficult market, it can be a tool that I have in my toolbox. The sixth question I like to ask for context is, what price action will cause the most pain? That's the market's job, to cause the most pain to the most number of traders. A lot of times, if you have too many traders that are bullish, that will mark a top, and too many traders that are bearish, that'll mark a bottom. Usually what the most number of traders are betting on doesn't happen. That situation is also often considered a crowded trade. If you have too many bulls and you have a strong, hard shakeout to the downside, that's probably going to cause the most pain to the most number of traders. Now that pullback may not last more than a day or two, but it is going to crush a few weak hands, traders that are late to the game. The seventh question or thing I like to focus on is the first reaction and the second reaction. Usually when you have a catalyst or a news event or something, even an earnings release, you're going to have a knee-jerk first reaction, and it may be up. But what's the second reaction? After the market has a little bit of time to digest the news, does it pause and then have follow-through to the upside? Or does it pause and then start to pull back? The second reaction is always more important than the first reaction, and that's something I like to pay attention to. I ask myself, is this a high return or a low return environment? What do I mean by that? If price is in a range, that's pretty much a low return environment. Yes, you can trade it if it's wide, not so much if it's narrow. And you can probably make money if you have very good, precise execution and discipline. But that's not going to be nearly as profitable as a trending environment, which is a high return environment. And all this can apply to any time frame, whether you're a day trader or a swing trader or a position trader, a growth trader, a futures trader. It's all applicable. Also, if I'm shorting something, I like to note whether volatility is rising or falling. Some other things I like to pay attention to are the US dollar. If the dollar's rising, it's going to act as a headwind for stocks. Does that mean that prices won't go up? No. Of course they can still go up, but it's going to be a headwind. And at some point, if the dollar rises enough, strong enough, fast enough, long enough, eventually it's going to present a bit of a problem, a more and more difficult hurdle for stock prices. Number 9, are there small risk entries at falsifiable areas? Now this is before I've even gotten into the trade. In my pre-market analysis, I'm going to be looking around, trying to figure out where would be a good entry. Where are areas I might consider small risk and falsifiable? Areas where I know if price moves above or beyond it, I would be wrong. You can do that in advance, especially if you're struggling in real time to identify your entry areas. Do as much work as you can in pre-market. Observe the price action and project the price action, areas you think it will go. That's an incredibly valuable exercise. You can evaluate how accurate you are or you aren't in terms of where you think price might retest. And then if you take the time to go back and check that, oh, was I right? Did it reach my area? Oh, was I off? How far off was I? Then you can begin to make adjustments and improvements in your ability to estimate. You can go back and look at the chart and say, oh, well, it went to this area and I overlooked this price consolidation from a day ago that lasted a long time or seemed significant, or I didn't realize that price bounced off the daily 20 EMA and then found support, and I didn't realize that that's an area it's found support many other times. Evaluating your ability to evaluate and estimate and anticipate and project price action can be one of the most productive things you do to improve your trading. The second step would be, if you're very accurate or often accurate, is to learn to trust your analysis. How can you trust it if you don't know what the batting average is? If you're mostly right or mostly wrong? That's one of the reasons a lot of people have a hard time trusting themselves and trusting their strategy, is they don't actually know how effective it is or isn't, how accurate it is or isn't. The 10th question I ask is this a highly probable or highly skewed reward setup? When I get into a trade, I only really want to enter if I think that probabilities are highly skewed in my favor, or that the potential reward far, far outweighs the risk. I want the best setup, and that's how I define best. It has all the other elements of things I've been talking about, but it also presents the possibility for a big profitable trade. Or I feel like I really have an edge in terms of probabilities being on my side. The 11th question I ask, and this is often a question I'll ask as the day wears on, or as price action progresses, as a trend progresses. Is this easy dollars or hard pennies? Is this the easy money? The easy money is a steady trend, no doubt about it. A nice, strong, steady trend. Was going down and down and down. And that's easy. That's easy money, easy dollars. Then at some point, it's going to have a more significant pullback. And then it'll go down. And then it'll start doing this, up and down. This is easy money. This is hard money. Here to here might be a few easy pennies, but this is the easy dollars. So once a trend starts to get long in the tooth, the trend gets old. And whether that's a trend on the 3-minute chart or a 3 to 4 month trend on a daily chart, there's easy money and there's hard money. And I want to focus my time, my energy, my capital on the easy money, the easy dollars. I don't want to fight for pennies. I don't want to struggle. I don't want to wear down my discipline and my concentration. I want to protect my financial capital, and I want to protect my psychological capital and resilience. So now's about the time price often finds direction. We had price pull back to about this prior area, which is a retest, and then it retested it again, found support, and started to bounce up. So some might say, well, why don't you just get out? Oh, I could. I guess I could. But I also know that price often likes to retest breakout areas. And depending on your perspective, you could say that here is a breakout area to the downside. Or you might say, here's a retest of a breakout area. I'm okay taking a loss. I know that often price will retest a breakout area. I can take a quick look at my MACD. I see on the early scout, the 1 minute, it's swinging to the upside. Still confirming downside on the 3 minute and the 10 minute. And we'll see. I'm not going to get bent out of shape if price hits my stop or retests the high. It's okay. Why is it okay? I mean, nobody likes to lose money, but it's okay because it's a small risk stop at a highly falsifiable area. The 12th and final question I ask myself is there a strong trend in place? And is what I'm seeing a change in character? This applies to stocks, the market, futures, whatever. This is a great example. Here we have this NASDAQ. We had this strong run up to about the 9,000 level, where everybody to that point expected maybe a retest of that level, and then everyone thought it was going to go back down. Instead, price continued to charge up and up and up into new highs, which caused a lot of pain to a lot of bears. But the main thing I want you to see is there a change in character? If you look at the run, you have all these pullbacks to the 20 EMA and it finds support and bounces. And yesterday was no different. If you were to have price drop below the 20 and down to the 50, that might be a sign that it's a change of character. Also, when you look at the pullback bars individually, there have been a couple of big down days. You had a gap down and then a very poor close on this day, but we've never had a new high negative reversal quite like this that's also engulfing, that looks like the 2 prior days and closing below 3 prior days. That could be a change of character. But that is a question I ask myself. Am I seeing a change of character? Meaning price action. Is there a change of character in the pullbacks? Is there a change of character in the advances? What's going on? Each stock, each ticker has a personality or a character, and you get to know it. And by getting to know it, you're able to identify things that are out of character or a change of character. So now we just wait. Looks like this is probably going to be taken out. At this point, I'm risking half of my original risk. Another thing I'd like to point out is, I think I've probably pointed it out before, obviously different software has different options, but in NinjaTrader you can choose whether you're looking at price, profits, P&L, percentage gain, or points. Rarely, if ever, do I like to know what the dollar is. That is not a good way to trade. It can really stir up a lot of emotions, fear, greed, all kinds of things. If you've done your homework, you already know what you're willing to risk or lose on a trade. And in terms of profits, you know what your P&L is all the time. Chances are you're going to choke that trade on any little pullback. So now we just wait. We wait to get stopped out, or we wait for it to continue in our direction. Again, I'd like to reiterate that whenever you have a retest, it's usually with overshoot. Price will almost always overshoot. Why is that? Because they're hunting for stops in obvious places. So as the day starts and you're watching price action, there are a few things you want to keep your mind on, which is there a catalyst? Is this a range, or is this a trend? Because you're going to trade a trend a lot different than you're going to trade a range. If there's a catalyst, maybe earnings, has all the good or bad news already been priced in? What's the first reaction or the second reaction? If you think it's a trend, your main objective should be to get on board as early as possible and ride that trend as long as possible. If it's a range, then you want to focus on only entering at the extreme edges of the range. Alright, now we can see that earlier this regression channel was sloped more downward. We compare it now to our static trend channel, we can see that it's flattening out. So those are two things I look for. Is it expanding or contracting? And is the slope changing? More and more I think that this thing might go up, but it doesn't really matter what I think. I've got a trade on, I've got rules, I've got stops. I'm not going to bail out of this trade. I'm going to let my stops do the job that they were intended to do. And that brings up another concept, which is you've got to give your trade room to work. You've got to give your trade time to work. If you haven't taken the time to learn how to read price action, you really should. You don't have to rely on gimmicks. All you have to do is watch price action and price structures and trend structure. And then you want some setups, meaning price action that suggests that you have an edge or a higher probability of being successful in whatever direction you choose. And then you want triggers that actually determine, if this happens, then I get in. If this happens, then I exit the trade. Really simple stuff. But the important thing is to be specific and clearly define everything. A lot of times people use words and phrases in trading, and they haven't actually taken the time to decide or define what they really mean. And when they delve into it, they realize how vague their understanding of it is. Our job as traders is to identify who is in control, and we do that by focusing on the facts on the chart. You want to look and see what's true, not what you want. And if you can't read price action, that's going to be very difficult. Our job is also to keep risk small, meaning a small distance to wrong, meaning a position size that's small enough that we won't be seriously damaged if the trade doesn't work out. And we also need to keep it at a logical, falsifiable area. So many traders I know use these arbitrary stops. I'm going to do a 5% stop, an 8% stop. Really, that's quite meaningless. What matters in the market is support and resistance, highs, lows, breakout areas. You want to put your stop somewhere logical. That alone isn't enough. It has to be at an area where you, without a doubt, know that you were wrong. Wrong about direction or wrong about timing. A lot of people will say a trade will go against them and then it'll start to move. Maybe after they've been stopped out, and they'll see, I know I was right. It's finally moving up or down. And what they fail to understand is they were wrong about timing. Wrong about timing equals wrong, even if price does eventually move in the direction that you thought. Our job is also to be patient and to wait for small risk setups. You don't want to just jump in and out of every little movement. You want to have a clear idea of what you want to see. If I'm a growth trader, I want a cup with handle, or I want a flat base. If I'm a swing trader, maybe I want to see a retest of a lower end or an upper end of a range before I get in. If I'm a day trader, maybe I want to see a head and shoulders pattern on the 3-minute chart. Or maybe I have a setup that's on a higher time frame, like the 60-minute chart. The setup on the higher time frame and my actual trigger on a lower time frame. Maybe I want to see price go beyond an upper Bollinger Band and shoot into overbought. That's my setup on the higher time frame. And then on the lower time frame, my trading time frame, I want to see a higher low. That's just a simple example off the top of my head. But I want to focus on my A+ setups. The setups where I have the best results most of the time. And I'm never going to know that unless I have a trading journal and I keep track of my setups. I really like the trading journal spreadsheets. It's fantastic. If you go to my website, tools, you can go to specials, and here it is. The developer of this spreadsheet, who's an incredibly nice guy, is offering a discount to everyone who's in my chat room. And you can just click on it and it'll take you there. You can track all kinds of data and get the statistics on it. It's very customizable and it's a great tool. So if you're asking, well, how do I know what my best setups are? Obviously, you're not tracking them. Maybe you perform poorly with a cup with handle at the traditional breakout area, but you do very well when you do a cup with handle and you do an early aggressive entry. Or maybe you're no good at cup with handle at all, but you do very well with a double bottom base. Those are just a few things that would be good to know in terms of having an A+ setup. Our job as traders is also to identify a changing environment and be flexible. Trends don't last forever. Ranges don't last forever. Volatility doesn't last forever or stay low forever. Being able to identify a changing market environment is probably one of the most important components in long-term trading success. If you can't identify a climax top and start taking profits when there is one, chances are you're going to get crushed when it starts to pull back. Just as bear markets don't last forever. Our job is also to keep drawdowns small. Losses happen geometrically. If you lose 10% of your account, it takes more than 10% to make it back. It takes 11%. If you lose half of your account, you basically have to make 100% to get back to even. So you want to keep the losses small. You want to keep the drawdowns small. In fact, you want to take action incrementally as your drawdowns occur. For example, if you experience a 5% drawdown, you might want to reduce your position size. Basically, trade less and trade smaller. If your account falls to 10%, you might want to stop trading or cut your position size down even further. If you decide to stop trading, you want to do post-analysis and see what's the problem, what's going on. Is it a question of discipline, or is it a question of mechanics? Is it process? Is it psychology? What's going on there? Have market conditions changed and I wasn't aware of it? I didn't identify that. Is there a change of character in whatever I'm trading? Is there a new catalyst? What's happening? If you can't track down the source of your underperformance, it is better to not trade until you do. Our job is also to protect profits. If you just exited a trade and you have a nice big profit, you made some easy money, why would you jump right back in to maybe choppy market conditions or choppy price action or ranging price action? You shouldn't. You want to protect your profits. Don't consider it market's money. That's probably the worst thing you can do. Once you make a profit, that's yours. That's part of your capital, and it becomes your job to protect it. Especially after big wins, you want to be very selective and very patient about the next trade. I'd also actually suggest that you take a little break. There's a funny thing that happens when you're doing really well. One, people tend to get overconfident and they start to get sloppy. They start to think that it's their genius that's responsible for their win and not the market. Market conditions and market volatility are really what's responsible for most profits. So traders will become more, as they become more confident, they get more sloppy with their entries, their exits, more sloppy with their setups, less patient, and ironically, they often tend to have their biggest losses after their biggest gains. So that's a trap you don't want to fall into. So we can see that I got dinged out of my first half. It's actually coming up on the time that price often will pull back. So I might be re-entering here with 10. Yep. I'm probably a smidge early. Maybe not. Probably what I consider to be one of the most important jobs as a trader is to keep things simple and streamlined so that I can execute and excel in real time. A lot of people have these checklists that are so long and so convoluted. There's no way in real time you could actually do it all. My main focus is what's the least I can do to be the most prepared, and how can I make things as robust and simple and efficient as possible, all the way from my routines to my price setups to my entries and my exits. And ultimately, as traders, our job is to always keep learning and improving. And I touched on this earlier, and that's post-analysis. That's your trading journal, knowing what your performance statistics are for your trades, for your setups, for your entries, for your exits, for your emotional state. Here's an example of TJS, the analysis section. It tracks just about anything you're interested in. Your win rate, your profit ratio, your expectancy. It'll break down your long or short trades what your win rate and expectancy is for all those. If you are a growth trader in this example, or a value trader or IPOs, whatever you trade, you can track. Like, you can see how well you did. You can see that you have a much better win rate with first stage bases than you do third stage bases or fourth stage bases. You want to figure out what you're good at and then really focus down on it. Then it's just a matter of scaling up in size as you increase your capital. Also, you can consider where are the most opportunities. Perhaps you did really well at value trades, but there's far less opportunities than maybe in growth stocks. You can see our trades starting to work in our favor. But I just wanted you to take a quick look at some of the things you can track. And all this is, you can change all this. Maybe you're better at trading pullbacks instead of breakouts. You have to balance your results versus the opportunities that are available. It's also a good idea to track errors. If you're chronically late or chronically early, that's something that you can work on, but you can't work on it if you're not aware of it. I also recommend whenever you make mistakes or errors, you figure out how much it cost you. For example, if you were late with your entry, maybe you would have made, say, $1,000, but if you had been on time, you would have made $1,500. Now that might not seem like a lot in the moment, but over time, over 100 trades, that can really add up. I also recommend that you track how well you followed your rules. Give yourself a grade for the trade. What does awesome mean to you? What does very good mean? Decent or bad? How do you quantify that? How do you define it? Be specific. If awesome is just, hey, I made a lot of money, that's not going to do you any good. For me, awesome is I followed 100% of my rules, I made no errors, and I caught 90% of the trend or the run. You can also track your psychology. That can give you insights on where you might be struggling or where work needs to be done. If you're feeling confused or rushed a lot, that might tell you that you need to define your criteria a little better, or that you need to simplify your process because it's too complicated in real time. All this data can be translated into a plan of action that can directly or indirectly improve your trading, and that's why it's so valuable. You don't know where you need to go if you don't know where you've been, and that's what a trading journal is about. From my perspective, post-analysis is one of the best things you can do. It's one of the most valuable exercises you can participate in to improve your trading. Most traders spend so much time trying to figure out what somebody else is doing. They'll jump from strategy to strategy, from guru to guru. When the truth of the matter is the Holy Grail is right in front of you. It's your own trades, and all you need to do is post-analysis to unlock what's working versus what isn't working. People who do post-analysis can make huge strides in their overall performance and their bottom line. Now, so far, it looks like we're stuck in a range. Usually, if we're in a low return environment, I'm not going to get really big in size. When you think about your setups, you do need to think about conflicting information and a hierarchy. What is the hierarchy? If you have information that doesn't line up, what's the plan? Well, a lot of times, if you have too much conflicting information on the chart, too much data, it's not a good idea to trade. But just because things aren't perfect doesn't mean you can't enter a trade if you've taken the time to define a hierarchy. What do I mean by that? I mean, which is going to take precedent? If your main concerns are, I want to enter at the right time, I want to enter at the right place, I want to enter with the right stop, and I want to enter when conditions suggest that I have an edge, what element is going to be the most important? If we use some of the examples that I shared earlier, will the MACD be the most important? Or will small risk be the most important? Or will being above or below a pre-market range be most important? These are the things you need to take the time to define, because the market rarely gives us everything we want the way we want it. There's almost always some level of conflicting information, and that's because there's always going to be bears and there's always going to be bulls, and they're always going to be trying to fight out to gain control. I would also suggest that you can figure out what your hierarchy is by looking at your trading journal and looking at your statistics and making really good notes. Also, you want to consider, when will you challenge a trend? More people lose money fighting a trend and not placing a stop than probably any other thing when it comes to trading. So those are two mistakes you don't want to make. And this is a nice example. Here's hard money. This is hard money. It's a range, but now we're getting into the easy money. And what happened? It went in our favor, it pulled back, formed a higher low, and then it went loose at a time of day, I mentioned earlier, around 8, when price has a tendency to pull back. What's happening now? It's also breaking below the pre-market range. Now this is where it gets interesting for me, is will it continue? If it's going to just pop right back into the range, that wouldn't be very constructive for a bearish perspective. Also, you do realize that being a 60 period, 40 standard deviation regression channel, that it's going to lag. But we did make our initial entry when it overshot that regression channel, and that proved to be a really great entry. Also, what proved to be a good stop was up at the top. If I hadn't split my stops, then one wouldn't have gotten triggered, but that's okay. I don't mind. I wanted to have a little risk off the table just in case there was a sudden surge up. And I don't mind adding back. And I added back a little extra because I know that failure can result in big moves. Failure to move higher, failure to move lower. After I entered, I should have put my stop at least down to about 107.60. I didn't because I was busy talking through this video, but that is where I would have put my stop. I actually find it really quite difficult to talk and trade at the same time. I'm a quiet person, so it's a real challenge to make these videos in real time. A lot of people will ask me, oh, why don't you stream live while you're trading? And that's one of the reasons. I find conversation very distracting as a trader. Now I'm going to be watching this closely here. Where did it go? I can look back prior areas. It's retested yesterday's open. That's what that is right there. I don't know if you noticed, but most of my trend lines are black because I want them to fade into the background, not clutter up my chart any more than needs be. I forgot to close off my my opening range earlier. Again, chatting to you. You think of levels, you think of them as thresholds or hurdles that price must overcome, or that the bull or the bear must overcome in order to gain control. The overnight range acted as resistance. It's broken below the value area, the point of control, the opening range, another value area. I'm going to go ahead and get rid of this for now. It's broken below the open, the overnight range, and here's where you need to be thoughtful. It's broken beyond the regression channel, 60 period, 4 standard deviations. Now, will it keep going or will it bounce back like a rubber band? A lot of times the NASDAQ in particular, but also a lot of other stocks, have these horrible trends. I'm going to go ahead and take 5 off. Lock in some profit. My stop at break even. Go ahead and put another one down at the value area. A lot of times this is how volatile stocks will trade in this long wave. And this is the regression channel line, 60. And it can make it very challenging for a lot of traders to trade. I call these wavy trends. It's very hard to trade wavy trends. But one thing I look for is this. Dips below, dips above. What happens here and here is important. You want to look to see, is this going to keep going? Or is it coming back in to the channel? So I look at my 10-minute, and the MACD looks like a wild dog got a hold of it and tore it to shreds. This is not a very smoothly trending MACD, but it is sloping downward overall. We're not in any kind of overbought or oversold situation. We're not outside of any Bollinger Bands. This is going to be very interesting to see how this plays out. Will this be a pullback or will this be a reversal back in? If it's a reversal back in, what we're going to have is what I call a double morning shakeout, where it overshoots the opening range on both sides, the long side and the short side. Hopefully, though, what we'll see is something more like this. There's that overnight range, and here's price. Hopefully we'll see something like this, or something like this, or even better, something like where it doesn't even get all the way back up to it and down. You also might take the time to consider what each one of these means. This one versus this one versus this one. This means more bulls right here, less bulls, and even less bulls. Learn to read price action. Some things I cover in pre-market is how's the market, who's in control or recently been in control, is the overall market environment changing. It's important to trade profitable setups, have profitable entry triggers, and let's talk about profitable discipline. This morning you saw discipline. I had my stops. I felt they were good. I left them alone. One got dinged. I didn't freak out. I didn't have a meltdown. I saw a re-entry and I took it. I also didn't move my stop, hoping that, as 8 o'clock approached, it would start to move in my favor. I just took the loss and then I took the re-entry. Simple. One of the best things you can do to remain disciplined while you trade is 1, trade selectively. Be patient. Wait for what you're looking for. Keep your focus on technical issues. Yes, be aware of the stories you're telling yourself, your emotions, your fear, your greed, but keep your focus on technical aspects of the chart. Focusing on whatever indicators you use, the MACD. I really don't have that much on my chart other than levels. I'm using this regression channel today to show you how to use it as a tool if you're struggling, but usually I just have price action and a MACD and a few levels. And I don't have all levels everywhere. I usually have monthly, weekly, daily price levels on my 60-minute chart. Strip everything off your chart that you don't absolutely need and keep your focus on what's on the chart, the price action, your indicators. My 2 indicators are the 5 EMA and the MACD. That's it. So what might my technical focus be to help me maintain discipline and not panic out and choke the trade? I can say, well, the MACD is still moving in my favor on, the 3-minute chart and the 10-minute chart. I might also focus on the fact the price is still below the 5 EMA and still below the pre-market range and still below the open. When it comes to being cautious, I might focus on the fact that price is outside the regression channel and that the one might be changing because it's flattening out. There we have our conflicting information, our diverging information, whatever you want to call it. So instead of being anxious, I fall back on my rules. I fall back on my entry and exit triggers. I'm not just thinking, oh yay, it's moving in my favor. Oh yay, I've made 97 points. I'm paying attention to these tails, these lower shadows. To me, that's something to be cautious about. Pay attention. Doesn't mean I panic out. It just means I pay attention. Also, when I look at this run, this is the first pullback. Can I be patient enough to wait through one pullback? Also, to maintain discipline, after so many losses, consecutive losses, you take a time out and you do a quick post-analysis and assess what's going on. Probably one of the best questions you can ask yourself is, am I fighting a trend? If you're trying to get long and prices collapsing, you're fighting a trend. If you try to get short and prices shooting through the roof, you're fighting a trend. It never pays to fight a trend. If you're experiencing consecutive losses, that's the first question you should ask yourself. And then stop. Regain your equilibrium. What's in the driver's seat? Your rules, your triggers, your setups, or is it your emotions and the stories you're telling yourself? And if you're telling yourself a story, which is, really all beliefs are, is it hurting or is it helping your results? Is it harming your performance or is it helping your performance? And if it's harming your performance, then you need to switch your story. And all that means is you're switching your focus. If your story here is this, as it pulls back, is, oh no, I'm going to give back profit, I'm giving back profit, I'm giving back profit, that's not very constructive. That's not really going to help you. So you can change your focus by looking at technical aspect on the chart, or you can change your story. I have a profit cushion, I can sit through one pullback. Or I have a profit cushion and I won't exit unless it closes back into the opening range or the morning range or the overnight range, whatever. Replace your story. That'll help you with your discipline, and it'll also help you with your psychological resilience. Willpower alone won't make you disciplined. You have to have other tools and techniques. You have to be strategic rather than emotional when you trade. And one of the easiest ways to do that is to keep your focus on some technical aspect of the chart and to replace unhelpful mantras or unhelpful stories. And replace unhelpful stories with something more useful and constructive. Looks like we might have a little support here. We made a new low, and now it's starting to bounce up pretty strongly. I think I'm going to go ahead and take 5. And I still have a small position, so if it goes again, another leg down, I'm good. It's also close to 8:30, which is the time where the pullbacks sometimes end. And that is often a time that I will take a little off the table if I'm in a trade. Back when I was talking about the character of stocks and tickers, along the same lines, you're going to find that some tickers work better for breakouts than others. The NASDAQ is a great example of price action that usually does not favor breakouts. If you wait for a breakout, more times than not, you will not be able to place a small risk stop. It will have to be large. You'll get chopped up if you try to do a small one. Whereas something like oil, crude oil, you can safely trade a breakout. Obviously, it's not that way all the time. The market conditions, of course, are very important in determining what's going on, but it's important to know whether you should be looking for pullback or retest entries versus breakout entries on whatever ticker you're trading. Some just have too much volatility to trade a breakout. If you waited and traded after it completely broke out here at about 107.10, the only logical place for you to put your stop would have been maybe at the top of the bar, 40 ticks away, or maybe even higher, 50 ticks away, or points away, excuse me. You'd have to have such a small position size, and even then, that would not be a good entry, no matter how you look at it. Some have a character where it's more difficult to add to your position, and some are easier. I find the NASDAQ to be difficult to add to unless you're incredibly precise and right on mark with reading that price action. Also, another thing to think about when you're thinking about the character of the stock is, what is the boss moving average? Often there will be a moving average on various time frames that will capture the bulk of a trending move. Being aware of what that is can be quite helpful. I want to throw out this is, don't be afraid to use simple drawing tools. If you're not sure, is the trend going to continue? Draw a trend line. If you're not sure, am I in a range? Draw a box. Draw a range. If you struggle or have difficulty with pullbacks, draw a box and wait for that threshold to be broken. A trend line is just sloped resistance and support versus horizontal. So now this is popping back up into the pre-market range. It seems to be struggling a little bit around the open, a little back and forth. If you're not sure, go to the 1-minute chart. For every one of these candles, you're going to have 3 candles on the 1-minute chart. How's price action look? Does it look strong or does it look weak? Some clear buying right here. Boom, 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 boom. A little hesitation, some dojis, a little struggling at the open, and right here the battle's being played out. I feel like this is an important candle right there. We'll see. Maybe it'll form a range for a while before it decides what it needs to do, before the bulls or the bears can gain control. You can see what I was talking about. This is the easy money. Pull back, now we're in a range. This is the hard pennies right in here. So we're seeing some follow through to the downside right now, but may not last. That's not even a closed bar. And it could stay in this range for a while. If you remember, I said around 9 a.m. to 11 a.m. price action can be pretty dull. Not always, but sometimes. So what am I focused on now? Now I'm focused on this range. I'm definitely, if I wasn't in it, I definitely would not get in it while it's in a range unless I got in at the extremes, going short at the top of the range and long at the bottom of the range. But that's hard pennies. And the reason I'm able to sit through this kind of nonsense is because I've taken partial profits. Scaling out is one of the best things you can do in terms of maintaining discipline. My stop is beyond break even in a profit area. So essentially this is a risk-free trade. Okay, this recording is coming up on about 2 hours, so I'm going to go ahead and shut it down and save. I hope that some of the things I've shared today will help you if you're struggling with a particular ticker or with a particular market environment. I have a lot of free educational material on my website, articles, blogs, books. I have some webinars or videos, video web lessons and such. I've got some presentations here, all under the Learn or Education tab. But then again, there's also some under TIBD lessons, which stands for Tacoma IBD lessons. I used to run a Tacoma IBD meetup group, And this is our little annex. You can find all kinds of information on how to trade growth stocks. In closing, remember, define everything, keep it simple, and focus on the technical aspects of your chart. And do as much work as you can before the market opens, and always do post-analysis every day that you trade. Even if you didn't actually enter or exit, there's still great value in looking at charts and considering how you would have applied your rules and your process and your strategy. And last but not least, the quality of your trading is going to be determined by the quality of the questions that you ask yourself. And all questions is focus. So are you focused on the things that are giving you the results you want? And if you're not getting the results you want, then you need to shift your focus. Here's how the trade worked out. The best exit was for 149 points. The duration lasted roughly 3 hours. Initially entered short 10 contracts, got knocked out of 5 on a defensive stop, then with stalling, reshorted 10. Took 3 exits total, the first after a big move down, the second after it appeared there might be support near the low of the day, and then the final exit came later in the afternoon after another leg down for 149 points. The final exit was more defensive, and the exit was taken so as not to give back gains. If you're interested in joining my chat room, just go to my website at zazencapital.com. If you're struggling, I hope you found some of this helpful. Thanks for watching, everyone, and good fills.